Good afternoon, everyone, and welcome to Stock Market Today. It's Alissa, Coram, and Shreve here with a breakdown of the action in today's session, where we saw more red across the board, Ken, and in typical fashion for a weak market, strong open and bad close.
Yeah, that's what we kind of talked about this morning on IBD Live, that the market is starting to act unhealthy. And I mean, the NASDAQ was positive very late in the session, not by much, but it was positive, and then it ended sharply lower. So wave of selling hit the market during the final few minutes of trading. That said, we'll talk about three stocks that we're keeping a close eye on here in the natural gas space. Comstock Resources, CRK, bounces nicely off a key support level today. Constellation Energy, which soared recently on earnings and is trading tightly near highs, showing good strength and support. And finally, Costco at a key support level here. Will it hold?
Yeah. Today's show brought to you by the letter C, but let's take a look at those major indexes. So the NASDAQ today down 0.6%. We had the S&P 500 down about 0.8%. The Dow, the hardest hit, down 0.9% today. Small caps, the least hard hit, down about 0.4% today. But as we noted, we've lost the 50-day moving average, that round number at 12,000, and a 10% drop from that peak just a couple of weeks ago, Ken. So a lot of signals pointing to a very unhealthy market at this point.
Yeah, no doubt about it. At one point today, the NASDAQ did cross the 12,000 level. It was up 1.2% intraday. That was very early in the session, but you can see it closed near its session low, and you can see all that selling that came in very, very late in the session. But back to that daily chart, I was looking at the NASDAQ over the past 9 trading sessions, and it was up 2 of those sessions. The 7 down days all closes at or near session lows. So this is just a market that is really suffering from a lack of buying demand. I mean, that may seem obvious, but you know, we're below the 50-day moving average. We tried to rally back above it today, got turned away. So you know, talked about it this morning that the risk reward for individual investors is you know, not all that great right now. So if you're going to be buying any stocks, they need to be really kept on a tight leash. It feels like the market tide is certainly flowing negative now, and the best time to make money is when the market tide is flowing positive.
Yeah, totally agree. Keep them on a tight leash and be very selective in the first place. We want to be focusing on those high quality stocks. Let's also take a look at the S&P 500. Similar story here, turned away right at its 200-day line, slicing below the 50-day line in Tuesday's session. And today, continuing further down, we also have the Dow 0 DJIA in Market Smith, again, slicing through its 50-day line. Here's a look at the DIA ETF to show today's price bar there. So eating into this further into the strong rally that we saw really kick off towards the beginning of July.
Yeah, well, we've got a distribution day count that is starting to get pretty elevated, with 4 distribution days on the NASDAQ and 4 on the S&P 500. Looks like we got lower volume on the NASDAQ today, so that's kind of cold comfort on a really, you know, another bad day for the NASDAQ. But yeah, it's a market that is definitely showing signs of distribution, and of course now everybody's saying, well, it's only a matter of time before we test these mid-June lows, and I think it's too early to say that, but you know, the fact that I think last Friday was really the big warning shot from the market.
Yeah.
We saw all that price destruction. So whether or not we retest these mid-June lows remains to be seen, but you know, the market's not looking great right now, so that means investors should be scaling back and taking some gains if they have them, because if you've had some nice winners since the June lows, maybe some double-digit percentage gainers, probably some of those have faded to single-digit gains. Yeah. So rather than see a buy turn negative, not a bad idea just to take some profits here.
Yeah, some great advice on the portfolio management front there, Ken. Let's take a look at some individual names, starting off with CRK in the US E&P group. We saw a number of upside reversals for stocks in this area of the market today, with shares up 4.1%. Does look like volume was a little lighter than average. A heavy volume decline for a lot of commodity stocks in Tuesday's session, but good to see shares here have a little bit of a buoy and try to pop back up.
Yeah, right off the 21-day exponential moving average here. So Comstock finding support where it should. But as you noted, I mean, the volume in Comstock yesterday was very heavy to the downside. So there were some big sellers in the stock. Today, you can see volume really slowed quite a bit. So this is not the interplay you like to see. When a stock is rising, you like to see it rising in big volume, falling in light volume. So we need to see the price and volume kind of switch around a little bit here. But nonetheless, Comstock is one of the leaders among the oil and gas producers. It's mostly in natural gas, Comstock, but good stand at the 21-day line here. On my watch list. May get a good entry here, and energy stocks could continue to lead, but just want this to set up a little more.
Yeah. So would that be just more of a formation of a handle or a tighter consolidation around these levels, Ken?
Yeah, I would say this is at a point, it rose over that 20 level, got close to that recent high of 22. So this is a point where you'd expect to see a little pullback. So this could be the early stages of a handle forming here that, could pave the way for an eventual breakout over the 20 level. Still a tricky market that hasn't been very kind to technical breakouts in recent weeks, but still like the look of Comstock here.
All right, well, now let's take a look at Constellation Energy, CEG. What's written in the stars here for this stock? Well, it's looking quite strong with some tight action around the 80 level, really resisting the downdraft, Ken. Today's volume was just slightly above average, but the heaviest volume, it looks like in a number of weeks, has really flexed its leadership muscles since that strong breakout on earnings.
Yeah, I was almost thinking that this company, there may be an acquisition, or maybe it was being acquired by somebody, because it's just showing such tight action up near highs. But it first gapped up in late July. That was when this big spending bill went through Capitol Hill, and there was a big climate spending component, and that's when Constellation initially started to move. And then they reported earnings in early August that fueled even more gains. So take a look at I like there are the two gaps up, and see now it's trading tightly around the 80 level. We go back to that weekly chart and just see a series of tight weekly closes. So this stock is doing a lot right. It's a clean energy firm whose focus is carbon-free electricity. So you can see in the latest quarter they had a 32% rise in revenue. Still losing money, but they have a big estimate for 2023. So I think this stock looks interesting in the alternative energy space. Good tight action after a breakout. Looks really strong.
So if we do see the stock clear a 3 weeks tight, I mean, typically we reserve that kind of entry to add on to an existing position in market conditions that are favorable. So how long would this be a watch list name versus on your buy list, Ken? What would you ideally see from the stock to get you involved?
Well, if this stock were to make a move over its recent high, it may be worth a little nibble, maybe a 1 or 2% position to start. But you're right. I mean, typically, the best time to buy this is when it initially broke out of the base, and the 3 weeks tight pattern is a way a stock shows strength and support after a breakout. And like you said, it's best to use as an add-on, so to increase a position in a stock. But you can use the 3 weeks tight to start a position. Just make it small. I think the strength and support the stock is showing is quite noteworthy in a pretty weak tape right now.
Yeah, and so then it seems like if we are keeping a tight leash on stocks, maybe the stop would be the lows of this tight area. That would still be above the 21-day. But again, if we're keeping a tight leash on these things, that might be one way to do it.
Exactly. Just a good lesson of what really a perfect looking weekly chart looks like after a breakout. Just showing strength and support. It shows that institutions are comfortable with the stock trading around the 80 level, and tight action like this after such a big 3 week move is just a sign of strength and support, and it tells me that the stock still could be under accumulation here.
Yeah. Yeah, some high praise there. And then I guess one last thing, if we don't see a breakout of the 3 weeks tight in the near term, maybe it continues to act in the same personality and let that 21-day line catch up. Would a bounce off the 21-day or a reversal there be another potential opportunity?
Some of the strongest stocks that we're seeing in the market right now are coming down to their 21-day lines and finding support. The market hasn't weakened enough to see a lot of stocks coming back down to their 50 days, but seeing a lot of strong stocks. That's why we started with Comstock. That was a nice move off the 21-day line, and seeing a lot of other stocks like that. So yeah, I mean, if this comes down to the 21-day moving average and makes a good bounce, with hopefully some volume, we should see volume start to pick up in the market after Labor Day, because we've been in the summer doldrums. But support at the 21-day line would be good. Also, it could just kind of keep moving sideways and form a flat base, which is characterized by tight sideways trading. Typically don't see a pullback of more than 10 or 12%. So that's another scenario.
All right. Yeah, we'll have to see what we'll get, but good to have those potential scenarios in mind. So we'll be ready to act if we do get one of those scenarios to play out. Now, Costco, a little bit of a different picture here with support in question for the big name retailer, right at some converging moving averages, the 200-day and the 50-day. Can this be a floor of support for the stock, Ken?
Well, that's what we're looking at. When you see the 50-day and the 200-day line converge like this, it can often turn into a really solid support level. So, like you said, this still to me looks like a test going on. It was it was up late in the session, but got pulled down late with the with the broad market. We're still holding this on leaderboard and are just going to wait and see if support plays out here. If it doesn't, we may cut ties with the stock. But when you're talking about retail. The retail sector, Target and Walmart tend to get a lot of, they're rightly so regarded as the bellwethers in the retail sector. But I also like to watch Costco, just because it's it's really a fundamental superstar in the sector. It's got a great earning stability rank due to a consistent track record of growth. So if this one were to break down, that could be problematic. It hasn't yet, so we'll see if it holds support at this key level.
Yeah, on the bubble, because it seems like further deterioration would warrant
Easy for you to say. Yeah.
would warrant action in terms of selling. But if we can get a bounce at those converging moving averages, maybe get it to clear a trend line,
exactly,
volume behind the move, that
we're
prompt a new buy or an add.
We'll just need the market to just kind of improve, and if the market does improve, we'd expect Costco to find support. But again, on IBD Live this morning, Ali, I did mention that the past two Septembers have been pretty rocky for the stock market. September of last year, the Nasdaq was down 5.3% for the month, and then the prior September in 2020, it was down 5.1%. So two straight pretty bad Septembers for the market. Doesn't mean it's going to happen this time around, but something to keep in mind. Yeah. It's been a tough September's been a tough month over the past 2 years, so we'll see how it all plays out.
Yeah. Absolutely. A great reminder there, Ken. Thank you so much for that. And thanks everyone for tuning in. Well, that's a wrap on August for 2022 in terms of the trading action, but we'll be back for September and we're ready for it. We'll have to see how that month will pan out. But to kick things off, Thursday afternoon, we will have our scorecard webinar for Swing Trader. And we hope you join us a half an hour after the closing bell for a wrap up and a look at August performance for our short-term trading platform. Looking forward to seeing you there. Thanks, everyone. We'll see you right back here tomorrow after the close.